It promised the highest savings rate in America, about 20 times your bank, climbing all the way to 7%. So people moved their money in. There was just one problem. When they tried to move it back out, it didn't come. Days became weeks. Weeks became months. For some, it never came at all. This is the app that paid you interest you couldn't reach until the U.S. government had to switch it off. Rewind to 2017. Savings accounts at normal banks were a joke. You'd earn pennies a year. Then Beam appeared, a free app founded in San Francisco by Yinan with an offer that stopped your thumb mid-scroll. 0.2 to 1% interest, roughly 20 times a traditional bank. And if you referred your friends, you could boost that rate as high as 7%. The industry's best possible rate, they called it, and it was designed to spread. The rate wasn't just high, it was a game. Refer a friend, watch your number tick up. People screenshotted their 7% dashboards and posted them like trophies. Money poured in. On paper, everyone was getting richer by the day. The dashboard said so. The dashboard always said so. Then people tried to take their money out. Beam's own promise was specific. Request a transfer, get your funds in 3 to 5 business days. Instead, nothing arrived. 3 to 5 days became 3 to 5 weeks. Support tickets went into a void. And remember when this was? 2020. A pandemic. The people who needed their savings most were the exact people who suddenly couldn't reach them. In 2020, CNBC investigated and found dozens of customers locked out of their own deposits. Some waited months. Some never saw their money again. And that headline 7%. The FTC later said many users were actually earning 0.04%. The same as the bank they'd left, and stopped earning anything the moment they asked to withdraw. The dazzling number was the lure. The fine print was the trap. In November 2020, the Federal Trade Commission sued Beam and its founder. The charge was blunt: false promises of high interest and 24/7 access to money that customers simply could not get. By early 2021, it was over. Beam was banned permanently from ever touching customer deposits again. Yinan was barred from running a business like it, and the company was ordered to refund every dollar, about $2.6 million, back to the people it had locked out. Here's the part that should keep you up at night. Beam was never a bank. It was an app sitting on top of one, and most users had no idea where their money actually lived, or whether that instant access was ever real. Beam was an early tremor. 4 years later, the same fault line, slick fintech apps, hidden plumbing, customers who can't reach their cash, would swallow tens of thousands of people when a company called Synapse collapsed. Beam was the warning nobody heeded. So what do you actually take from this? 1. If a yield is wildly above the market, someone is paying for it. And if you can't see who, it might be you. 2. Instant access is just a marketing phrase until you've pulled your money out and watched it land. Test the exit before you trust the entrance. And 3. A beautiful app is not a bank. Know what's underneath, who holds your deposits and whether they are truly insured. The rate gets the headline. The plumbing decides whether you ever see your money again. Some